Hey gang, this is Vinny Biscotto with the Biscotto team, and this message is for all of our first-time investors out there. So if you've been thinking about maybe borrowing from your IRA or your 401k, or you've had some money set aside that you want to start investing in real estate, there's a couple things that you want to take into consideration when you're making the decision on what property works for you. So, of course, every rooftop is a great asset because you earn on the value of that property, not on the amount of mortgage that you might have on that property. But we want to be cautious when it comes to how much we're spending a month for that investment property. So what we want to make sure first is, if it's going to be a rental, does our rent and the amount that we have in our lease cover what the mortgage is and the property taxes and the homeowner's insurance for that specific property. So as now DSCR loans are becoming so popular, we're starting to see that attention being paid to what is the market rent, and how are we determining whether a specific property is approved or not based on the cash flow. And the thing that surprises me the most is when I'll get clients and I'll have their real estate own their REO, and we'll see that in some of these instances, they're losing money monthly. And that was because the terms of their acquisition loan really didn't work for them. They wanted the property, they wanted to get approved. They figured that they would refinance out of it into better terms, and it was only going to be a temporary thing. And then they had a hard time, or maybe the rates moved and they're not able to refinance out of it. And so on a monthly basis, they have a net rental loss compared to net rental income. Right. So it's impacting how their credit facilities work. And so I want to encourage you, while it is a great thing to go out there and purchase real estate for investment purposes, our goal overall is to have that property appreciate, right? Go up in value while someone else is paying the carrying cost for that property. Right. So if our mortgage payment is $2,500 a month and someone is paying a monthly rental of $2,800 a month, that's a good situation to be in. You're cash flowing $300 a month over your mortgage expense. So, in a situation like that, if you had three properties that were cash flowing and that you had $300 rental income every month, as opposed to that showing as a loss, hitting as a loss every month because the terms of your acquisition didn't work for you. So if you're in the process of purchasing a home and it's for investment purposes, I would tell you, reach out. Let's talk about the property. Let's see what your investment goals are and see if these terms work for you, because that's the most important thing. We want to have a property that pays for itself, is in a good market to appreciate, and has a very low maintenance cost and annual expense associated with that property. You can call me, Vinny, at 817-714-5090, or you can reach us at thebiscottoteam.com. And remember, for all your mortgage needs, talk to Vinny. Have a great day, everybody. Bye-bye.